Sniper, it's Francis, and we're talking crypto. So, Mike Novogratz, he is of fame for the Bloomberg Galaxy Crypto Index. And yeah, so he's a big wheel, talks on big stages, etc. He is calling a bottom in the index. This is his index. He's popularizing his index in this tweet. Of course, it has Bitcoin obviously as a large player, but it also has Ethereum, Zcash, Monero, etc., etc., etc. His largest narrative is this is where we went parabolic. We've now returned to that level. This is a bottom. That's in a short. I'll read it exactly what he said. This is the BGCI chart. I think we put in a low yesterday. We retouched the highs of the late last year. I think he's referring to August. And the point of acceleration that led to the massive rally bubble. It's not a rally. A rally is something that happens in a bear market when you're on a downside and you have a move up. A correction is a down move in a bull market. So it's not a rally. It's where you went parabolic, Mike. But anyway, terminology corrected. This is what he means. That point where you went parabolic, this was a rational point, he's saying. All calm and rational, logical high. And we went a little bit doolally from this point. And now we've returned to this point. Therefore, the doolally bit is behind us. And we can just go forward and go back to going up. No. My haters are going to love me for getting this wrong. But I'm sticking my neck out as much as he has. Credit to him for sticking his neck out. I'm saying, Mike, you're incorrect. And here's the reasons why. Okay, so number one, Bitcoin. This analysis I'm going to do on Bitcoin. I don't acknowledge his index particularly, but Bitcoin is largely it. In other words, is a proxy and is very similar to the chart. So what have I got here? I've got a weekly chart. Now let's just show you Mike's view before we get there. This is what Mike is looking at. And he's talking almost as a calendar year. Like nothing else that happened before matters. This is the calendar year, you know. And in fact, he only included August from there. So he's saying, you know, this old high that we had round about here, where was it? These old highs that we had round about here, everything, in fact, probably here in this region. Here's where we went ballistic. And I should do this, first of all, unlogarithmically, and then I will show you why I do it logarithmically, regular. He's saying, here's where you went ape, and you parabolically pumped, and now we've come all the way back down a number of times. We've based out here, and this is your low. And therefore, we are back to a normal Bitcoin chart. And my big problem with what he's saying is that the only point that was irrational is this parabolic in dollar terms, where you went from as low at that point in November 5.4 to just about 20, which we can call close to a 3.75x, almost a 4x. Then you have to remember, what has Bitcoin done since the last bear market, first of all? Second of all, if you frame the discussion just around this view that you're seeing on my screen, you're not looking at the complete data set. Bitcoin doesn't care for calendar years that humans treat as, another year, 365 and a quarter days. What's magical about that to an underlying market? Only to the people that participate in it. We measure things according to, we measure 10. The decimal system should actually be 12 because you can halve it more times, or 8. You know, not the reason it's 10 is because we have 10 fingers and that's how we counted. So, I mean, the calendar year is not logical to anything else but a human. And if we actually have a look since the last bull market, I'm going to also, before doing this, I'm going to make this a logarithmic chart. Because the thing you do with a logarithmic is you get perspective of percentage move. Mike, I want to ask you, if this move is the illogical move, that line length, in percentage terms, isn't this a bigger move? You've gone from, in the beginning of that same year you mentioned, so this is still in his chosen 2017 data set, you've gone from 652 to virtually 3,000. That's a 5x. 4.5. Why is that, which is bigger than this, not a bubble or a blow-off moment? Well, that's because it continued to go up. That's why. He's only picked this one because it's gone down and become a bit of a frustrating thing that doesn't want to go up in the way he's used to anymore. In other words, lower low here, lower high, and then we keep getting a succession of lower highs. Look at your highs. Down, 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 down. The selling is chasing this down, and we have a very, very key floor that we identified very early in our premium community between the 6,000 and the 7,000 mark. And we continue to have those lines as key levels of significance on these charts. And we apply this doctrine to everything we trade. By the way, you can check in for a free mini series on the link below in this vid. But that aside, those levels are key. Those levels are absolutely key. Soft floor and hard floor. Soft floor smashed, supported on the hard floor. Supported on the soft floor, reverse pumped. There was an extreme level of BTC USD shorts, which we also have today. That's 1 point for Mike, possibly in his can, but I'll tell you why I dismiss that for now. Soft floor fail, hard floor, soft floor resistance, sell off towards hard floor, break with momentum, back down through the soft floor, through the hard floor. We're now used to being below. We are now used to being consistently below the 7,000 level. That was the first soft floor that you spiked only in, and that you resisted in here, and that you supported in there before smashing it. Then you had a whole inverted head and shoulders that formed sub your 7,000 level. Then you broke out, couldn't get away for very long, back through your soft floor and hanging in here all the time. Got a few candles through your soft floor and you smashed it right down to the base of your hard floor again. 6,000 and 7,000 are the most critical key levels of significance in Bitcoin. People will go into losing money or making money depending on those levels. That is it, literally, since the last bear. Who'd like some proof of that? Why I say with such confidence that those are the key levels. This is a tool called volume by price, and there it is. Since your last low in the end of 2015, this was your 2014 bear. It ran for 18 months. So you got a low eventually in 15. Mike, since 15, you have been on a percentage ripper, of which this is 1% leg gain. That was outlier and huge. This is another outlier and huge, secondary to that. You've only picked probably the second biggest one, and it's only because it's not playing ball for you right now. This structure is inverted HVF. On balance of probabilities, we say it will break down. Does that mean it has to make our target? Absolutely no. We're guesstimating a target that will be sub 4 in the upper threes, which I'll explain a little bit more when we talk about the volume by price now. So this is, this is the facts. Why is that the only fluffy, frothy part of the market, Mike? And why is this the level of sense? Well, 6,000 and 7,000 is critical. Some will say from mining perspectives, others will say China mines for much cheaper. It's not going to be centralized mining anymore. I don't know. Mining is not my skill set. But if you look at the volume by price, this zone right here is the Bitcoin zone. Literally from there, which is your 6,000 zone, here are your most significant histograms. The participants in this market all start losing or making money when it leaves this area. The bulk of the people that bought in, they aggregated buy. This blow-off high, most of us, so this is 70% of the volume, by the way, and that's got one huge amount of volume that was all congesting in that dull period over there. But that outlier low aside, this market just ran up through these levels, never really kissing many of these levels. There's an absolute vacuum here, close to it. Where's the target that we're getting? These two semi-tall volume areas of the upper 3,000s to the lower 4s. there's a vacuum to fall through here. That the price just skipped through these levels. Didn't even lay the road that it was running down. It took so few steps, it was barely putting enough tiles down to land on. It's got to go back and gap fill a little bit potentially. That's all I might be suggesting. This was vapor. Everything from here was very low volume and vapor. So from your 12,000, the people that were chasing and purchasing in there were small level. Here's 70% of your volume. 9.7 to 5.7. That $4,000 range, with the bulk of it right here on our two blue levels of key level of significance. Now you're getting lower highs leaning on the hard floor, which is the 6,000 level. And you're saying we can't go bear for much longer. There's always a twist of the knife for a bear market. Could I be wrong? Yes. And if I'm wrong, I'll be 180 degrees wrong, and my haters can unite in the comment section, as they surely will. Aha, it pumps to the upside. It could do that. It could do that. Could be a short squeeze. Shorts are a bit high, but the data set for which we have shorts is very, very limited. It's September. I've just shown you data and volume by price since the end of 2014. Here you have something from September. We have yet to really make an extreme short high and an extreme short low in market conditions, because we just haven't had much data in this. There was a short squeeze there, and I actually was one of the guys short who got squeezed there. So I've been wrong before. Full disclosure, wrong here, but that was on a much smaller time frame. What's different about this compared to the last time we thought there might be short? That was it. It was flat bottomed. It was at a key level. It was very steep across the top, and then it just pumped. It just pumped off there. Boom, and it took a little bit out of us. It hurt a bit, but we size. We're okay. We survived, and we made plenty more on the short side. Down, down, down. So when this broke, it then stayed in the 6,700 level. It invalidated that inverted. It's a falling wedge. It's now leaning on the hard floor. The sell-offs are getting more brutal, and the up legs are more grinding. Look at the rising wedge. Look at this. And now take it into what it's doing today. So the prediction I'm giving you, which you can all have a go at me if and when I'm wrong. I'm going to stick my neck out like Mike. I'm going to say Mike is wrong. And I'll say further, 60%. That by the end of the American Sunday evening, in other words, when it turns Monday for Americans at their midnight, we will probably have resolved the direction of this squeeze. It'll either have run the 7,000 mark, or it'll have broken out of this weak grinding upside that we've been observing and will be trading lower. My suspicion is between this range, in these two hard yellow lines, we will have a turn point, and then we could start to get this kind of price action again. It'll be best in the beginning. It won't necessarily make targets, so I will actually lift psychologically. I will take at predetermined levels, but I will hold some for target, and it can overperform. It can overperform, and it could run right the way down, as much as Mike and no one else would want it for their businesses, to the 19,000 levels. There's no volume supporting this. If it clears the 4 and the 3s levels, it gets really thin, and there's a lot of people that got in here that are all panicking out at 2,000, 1,000. You could see a 2,000 and sub 2,000 trade on overperformance. So while I will have the bulk of my shorts on early, I will also take a large part of it off as we go. I'll leave some to close there, and I will leave a residual also in case of the Hail Mary bear capitulation. Because if we let go here, there's a lot of longs that need to escape. That's my take. The 60% end of US weekend, I would raise that to 85% by end of Wednesday next week. That we've either resolved to trade above 7,000, or we have begun a capitulative break to the downside that will see this level run at some point. That doesn't mean the level will be run by the end of Sunday or Wednesday, but that the move will have come. In other words, we've put in a relative high over here, and we will be selling off to the downside. And that could then bleed through the September, October, November period and be a pretty bleak time for cryptos. And alts will suffer even more. So whilst the structure is set up on Bitcoin, Ethereum is going to be a favorite short of mine. It's had a great rally now. It's had a snapback rally. 169 was a great target call. It's rallied all the way up to just about 220. So you could have, those that bought that rally, I'm just not interested in trading against the trend. It causes mental confusion, but big snapback rally. I think that could be a very interesting one to add to you as your shorts, but don't have too many, not advice, but what I will do, I will have no others. I'll have Bitcoin and one other, and I will also take off along the way. What you might find, Bitcoin doesn't make the target, but the alt does make targets higher beta. Okay, we'll see. By the way, register on the link for the mini course that's coming out. We're working on it as we speak. And of course, there will be a webinar, Jam, the free webinar on It's Not What You Make, It's What You Keep, especially in these bear environments. And then we'll be looking at the 5 M's and the 3 big benefits you get as well in that webinar. So, and there will be an offer for those that wish to join. It's largely not for most people. It's largely not for most people. You have to be open, take ownership of your trading, and you'll know if it's for you. But you're welcome to join and learn and see whatever we have to say as well as part of that process. But if you want to become a part of our elite community, you are welcome to take up the offer at the end of that and enjoy the content. If not, speak to you then. Enjoy your weekends. Play it safe. Sleep with one eye open. There will be a shoe about to drop, and I'll either be 100% wrong, or we'll begin some form of a down move that will relieve us of these levels that could cause a lot of people pain in terms of their crypto holdings. Okay, bye for now.